Hey everybody, Boris Forex. Welcome to the crosses section for Feb 25 to March 1, 2019. And actually, despite the fact that there's a lot of compressed volatility in the majors, there are some really interesting cross possibilities that are setting up right now. I have three ideas for you this week. Let's take a look at what I have. CAD Swiss, certainly looking like a pretty interesting breakout to the upside. We've cleared a lot of the shorter term and longer term moving averages. Really looks like it's ready to make a run perhaps towards the 77 mark. The only caveat, of course, with CAD is it's one step backward, one step forward, two steps backwards. So there's always a possibility that we can retrace a little bit. But as long as that 75.50 holds, I still think this is one of the stronger upside bids to the week. The two interesting cross trades that are just setting up almost in a very, very similar failed pattern are Euro Pound and Aussie Kiwi. Now, Euro Pound, to me, I was just actually shocked. We'll take a look at this on the charts, at how negative this looks. We had a massive reject at the upper end of the channel and now just teetering on the bottom. This is really almost a tell of the weakness of the euro as we close out the week here, and perhaps a little bit more further strength in the pound as the market gets much more comfortable with the idea that there's just zero chance of no exit Brexit or hard exit Brexit. Aussie Kiwi, another interesting trade here because, of course, we had that big reversal in Aussie and we had relative strength in the Kiwi. And the move this week should be also fascinating because if we get further wobbles in the Aussie, if we sort of get an idea that despite the easing of tensions between the U.S. and China, despite all of the modestly positive news out of the Australian labor force, there's still essentially potential for RBA to move towards dovish territory and consider a rate cut as we go forward, mainly because I think housing is just imploding everywhere in Australia and is a much more toxic force than anybody appreciates. All of that is kind of setting us up for this massive, massive break of the long-term support of the 103, and really the really big story which could overtake the two currencies is the move to parity, which I think would just resonate tremendously, both through the FX world and, of course, through much greater, I think, general public if we get to that point. So really worth watching here because we're now coming back to those very, very key levels. Let's take a look at the charts and I'll show you exactly what I mean. We can start with the Aussie Kiwi first. So we see the Aussie Kiwi here. We had the big spike. This was just sort of the fat finger low, but it really doesn't mean anything. We came back, recovered. What's negative about this particular construct right now is that we couldn't clear the 20 SMA. We had a major fail here, even on Friday, as we had relative strength to the Kiwi, ended up on the lows of the day, and now it just basically perched around this 103.75 support, right? We're at 104.3. We start breaking that 103.50 support, it really opens up the run all the way down. And certainly, of course, the 102 spike low becomes the initial support level, but all of that really just kind of creates a very, very powerful momentum for a possible move all the way down to parity. Let me just take a look at the much longer charts here. Maybe even, well, we'll take a look at the weeklies first. So the weeklies aren't telling us much. That we've tested the 102s a couple of times here on a basis. Let's go to the monthlies and just see how that shapes up. And you see that on a monthly basis, yes, we literally came very, very close to parity, almost touched parity here at 102.2. Now, what happens a lot of times is the first time we have a very seminal figure, you're going to find support, but in the second time they come after it, it could become a really serious break. We're still far away from kind of forecasting that this thing goes to parity, but what we're seeing is this embryonic move with the market certainly getting much more negative odd Kiwi in a long time than we've seen before, and it could be potentially a very, very interesting trade. So my argument here is basically, as long as you trade against a 20 SMA here on a daily basis, let's take a look at this. It's essentially a very, very small risk here. So essentially, I guess the 105. If you're in here with a 105 stop, but we never see 105 for the next several weeks, the downward momentum that could propel us down could be very, very strong. Obviously, the 103.50 has to be given. That's the key thing. So that's one construct. The other construct that's definitely looking very similar and even more negative, in my opinion, is the Euro Pound. And here's the Euro Pound. You see very similar flame out candle holding against this key support here of essentially 86.75. The drop here then takes us further towards the support of 8600. Now here, I don't think you're forecasting a massive decline, but relative weakness of the euro is, first of all, I think surprising to the market given all of the Brexit brouhaha. But the point being here is that the Brexit is actually becoming a positive news story for pound in the sense that it's not happening. And Europe continues to be mired in all sorts of negative feedback loops due to the political problems all across Europe and trade problems in Germany. So in the latest thing, of course, is this brouhaha that's brewing over Germany and U.S. tariffs protection, which would be disastrous for euro. So you see all of this pressure coming on here, and to me this is a very interesting trade here because this is probably you could take the trade here, and I think it's reasonable with a very reasonable stop at around 87.50. We come back to around 87.50 to 20 SMA. At that point, that this whole concept is broken. But a break here, if we start to see further euro weakness at the front of the week, really opens up the way for 86 at very minimum, and perhaps even 85. Overall, the whole euro pound cross here, as you look around this whole year, certainly not been a bullish trade. It's much more of a distributive trade here, with now a lower high and now a failed move towards the 20s. So I like this setup. I think it's an interesting trade here as the week opens up. And then the final setup, which is just a pure momentum